What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about a couple key concepts in order to be very successful at trading. So these are my trading strategies as well as the two indicators, the only two indicators that I use. Okay, a lot of people have been requesting this, so here it is, and I'll be posting this video on my TikTok as well, as I feel like it'll help a ton of people. Okay, so let's get right into it. So first of all, the two indicators I use, the number one is SATY, SATY, ATR levels, SATY ATR levels. An ATR level is an average true range. So let me just hide this other stuff. So I'm going to go over my indicators first. So SATY ATR, and an ATR is an average true range, and it basically estimates or gives you a visual of the average range that a stock will move. So the average move that a stock will make to the upside and downside. So one stock might move $2 a day, another stock might move $10 a day. So there's volatile versus non-volatile stocks. So more volatile stocks have bigger ranges. Okay, so SPY is like your standard. So this middle line, this gray line, is the close of the previous day. We're on the 5-minute time frame here. And on my SATY ATR settings, this is on the daily settings, so for day trading. So for SATY ATR levels, this is the daily, again, the daily time frame or the daily ATR, and then I'm on the 5-minute time frame because I'm day trading here. So this gray line is the close of the previous day. Blue line is what's called the long zone or the call zone. So it's where you go long, So if we get into this zone, if we start in this zone or open up close to this zone and we're in it, then typically you want to go long. You want to be long biased. And if you're in this yellow area is the sell zone. So put zone, I call it the sell. Let me go back. Call this here the sell zone. So this yellow area, when we get beneath it, it's the sell zone. And then here, this is the call zone. Typically, if we start in the middle here, we're going to move from ATR to ATR, and we're going to see, hey, are we going to try to get in the sell zone? And then if we start in the middle again, if we push to the upside, we're going to say, hey, are we going to try to be in the call zone? So it's kind of testing these levels, and they're very good levels, the SATY ATR, because it uses the Fibonacci sequence in the ATR algorithm. So other ATRs are just kind of basic ATRs. This one uses the Fibonacci sequence, so it's extremely accurate. And as you can see here, a lot of the time price moves right along it. So I'm pretty sure institutions are using a very similar ATR or very similar algorithms when calculating their plays. So above the blue is where you go long, below is where you go short. Now, when I'm looking on the daily time frame, let me switch to here. When I'm looking on the daily time frame, so this is the daily time frame. What I do is we switch this to the swing setting, okay? So if I was on the day setting, the day setting is very small and it's only for day trading. But if I'm looking at daily bars, daily candles, then what I'm going to do is I'm going to switch this to the swing setting. The swing setting. So now it gives me the average move for the month. Okay, this is really good for swing trading. And this is something you really need to pay attention to. Let me take off these EMAs. So right now we're still talking about the one indicator, SATY ATR levels. So again, the blue is if we get above this, we want to be looking for calls. The gray is the close of the previous month on the swing setting. And then the yellow is if we get below this, we're going short. So as you can see, last month, we were above the blue, which is the call zone. And if you just went long the entire month of May 2024, you would make $1 million bajillion dollars. Okay, that's my phrase, $1 million bajillion dollars. So you would make a lot of money because we're in the call zone. It's likely that calls are going to be the way to go. And that's just keeping it simple. I can go into more detail, but I don't want to confuse anybody. I don't like to talk about all the details of this stuff because at the end of the day, when I'm trading, I'm not thinking about the details. I'm thinking, okay, we're in the call zone, think long. That's all you need to be thinking. Keep trading simple. Don't overcomplicate with ICT, SMC, order block, blah, blah, blah strategies. They're ridiculous. So keeping it simple, that is it. Now let's get back to the second indicator that I use. Now that's the Saudi ATR. So the second indicators that I use AVWAP, anchored volume weighted average price. Okay, AVWAP, which is anchored volume weighted average price. And I don't want this video to be too long, like I said, so I'm not going to explain what this is. If you don't know what AVWAP is, you need to look it up because it's insane. It's different from VWAP, okay? And you need to look up how it is different from VWAP. It's way better. But anchored volume weighted average price, it's gas. Okay, so that's my pink line here. So my pink line is anchored volume weighted average price. My yellow line is the 20 EMA, exponential moving average. The exponential moving average is better. So EMA is goated than SMA. So EMA is better than the SMA. Now, if you use the SMA and your strategy is working, don't change. Okay. I'm not saying, oh, like your strategy doesn't work. I'm not saying that. There's a bunch of strategies, they all work. It's just based on what you backtest and what you're seeing. Everything's just patterns. Okay. Every strategy works, but it's just about how you play that strategy. So this strategy works for me, but the EMA is better in terms of calculating the average because it uses one extra data point than the simple moving average. Okay. So the EMA is, in my opinion, and in a lot of people's opinion, better than the SMA because it uses one extra data point. So that 20 EMA is what I use. And then the orange line is the 50 EMA. And all EMAs do is they calculate the average of the last so-and-so bar. So this is the 20. So it calculates the average price of the last 20 bars. This is the 50, this orange line, calculates the average of the last 50. This is the 100 MA and then the 200 MA. Now, I really focus on the 20 MA and VWAP when I'm day trading on the 5-minute time frame. When I'm doing more of a broader top-down analysis, when I'm looking at higher time frames, then I'll be looking at what the 20 MA, 50 MA, 100, and the 200 look like in relation to my daily candle bars. Okay. But when I'm day trading, I really don't care about the 50, the 100, the 200. They don't matter as much, just because the 20 MA is gonna catch these quick moves that happen on the intraday time frame. So all I use is Saudi ATRs, the EMAs, the 20, the 50, the 100, and the 200, and then this pink line is a VWAP, anchored volume weighted average price. Okay, so now that I have those two things, how do I incorporate them into trading? So again, what I'm looking for is what zone are we in? What zone are we in? So let me show a very good example of this. So 2 days ago, Wednesday, June 5th, I noticed that we opened up in the call zone, and you're gonna have to just back test this. Don't just take my word. Back test this. It works 100% of the time without fail. I don't care what anybody says. You back test it. It works 100% of the time. So we start in the call zone, and so we gapped up. We gapped up, starting the call zone. Of course, if we gap up, what's gonna happen, and you need to understand this, is we're gonna do a mean reversion. What is a mean reversion? A mean reversion is when you revert, you go back to the mean, the average price. So we're way too high. So we're going to come back to VWAP, which is the volume weighted average price. So we come back to it, and then we create what is called a micro double bottom. Okay, micro double bottom, bounce off of the 20 MA. And usually if price is trading above the 20 MA, it's going to stay above until it crosses below. If price is trading above VWAP, it's going to stay above, as you can see, until it crosses below. This is a good rule of thumb. When you're trading, this makes it easy. If you're above, we're going to stay above. If we cross below, it's going to tend to stay below. Okay, simple rule. Keep it in your head. But using this call ATR, we moved to the we opened up there, did a mean reversion. So we just bring price down to the mean just to make it to balance out price. And then we make a micro double bottom, sign of a reversal, and push back up into the call zone. Now that we've made a very nice bullish bar into the call zone, and we're above the 20 MA, and we're above VWAP, these are 3 signs of confluence to be getting into trades going long. Okay, so we're in this call zone, we're in a high probability long area. So we want to be going long, and that's exactly what we did. Now, when do I get in on calls, or when do I go long? I trade options. So I go long when VWAP is above the 20 MA and I have other signs, okay? But VWAP being above the 20 MA is very significant for going long. Now, when do I go short? So I go short when VWAP crosses below the 20 MA. Okay, so if VWAP crosses, if price action crosses below VWAP, but VWAP is still above the 20 MA, we're not gonna continue, because there's still volume. There's still the volume weighted average price is still above the last 20 bars. Okay, so we see these crosses. I'm not taking shorts, and then we cross again. I'm not taking shorts. But once VWAP gets below the 20 MA and we cross below both of these, then this is your sign to get in. And then again, like I said, you back test this. This works 97% of the time. I don't know anyone else with this strategy that works that much. It literally works 97% of the time. And I'm not saying, oh, join a Discord, this, pay $1,000. No. This is free gems. Take it and learn from it. But yeah, just back test. Make sure you're back testing this stuff. You don't just take my word. Don't take anybody else's word for their ICT, SMC, ABC strategy. You need to be putting time into the charts. So those are the two indicators that I use. That's the strategy. I keep it simple. There's nothing else to the strategy. It's literally it. If we're, like I said, if we're at the close of previous day, then literally we're going to be looking to go to one or the other ATR. If we get above the blue one, we're going long. If we get below the yellow one, we're going short. But if we start in the middle, we're going to be looking to go to one or the other. And we typically don't really get into those zones if we start in the middle. Okay, keep it simple. That's how it goes. Now the last concept, this is the best video of all time. This is the best video of all time. All right, the last concept that you need to understand when trading is trend bars versus non-trend bars. Okay, and I'm going to show this in real time. All right, I'm going to show this in real time. So what is a trend bar? What is a non-trend bar? So a trend bar is a large bar that contributes to the direction of the trend. When I'm back testing, I mark all my trend bars. So I put a little sunshine next to them because they're pretty big in relation to other bars. These are trend bars, so they contribute to the direction of the trend. For instance, this red bar pushed to the downside, this one pushed to the downside. It's contributing to the downward movement. Now, other trend bars would be something like this green bar. It's contributing to the upward movement. Now, non-trend bars would be these bars down here. So dojis, and these little bars, okay? These little bars literally cause price to go sideways. So this is a non-trend bar. Non-trend bar. The only time that you need to be getting in on trades are after trend bars. After trend bars. Trend bars. So for instance, this is a really nice bearish bar close to its low, which means there's a lot of strength to sell. You would get in, after it closes, you would get in one tick below, which is this start of this next bar, and then it would absolutely print. But if you get in after a non-trend bar, you're going to go sideways for a little bit. There's no reason to get in after a non-trend bar because it just means we're going sideways. Okay. So these are major concepts to understand. So that's my strategy. I look at trend bars. I look for non-trend bars. I look for the EMA. I look for where we are in terms of the ATR. Okay, no, I don't use like Bollinger Bands. I don't use the MACD, RSI. All that stuff doesn't really matter. Doesn't really work. You can use it for extra confluence, but in my opinion, these are the best indicators. Your strategy might work too, though. Your strategy might work too, but this is really good stuff. Good stuff. So yeah, take a look at that. Let me know how it works for you. Hope you have a great day. Stay fit mentally, physically, financially, spiritually. Let's have a great one. Keep trading. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and